As the end of the pandemic looms over the distance, markets are slowly opening up, and the economy steadily rising up, reaching a 2.6% growth during the fourth quarter of 2022. The unemployment rate is also going down, from 15% in April 2020 to a manageable 3.6% in February this year. But aside from the slowly rising post-pandemic economy, most economists fear another recession, and this time, the housing market is the one skating on thin ice. Today at FinancePer, we will talk about the predictions and forecast about the 2023 housing market, how it's similar to tulips, and if home prices will be affordable again. But don't forget to click that subscribe button for more videos about finance, technology, and business. Housing prices during 2020 were sold by realtors at the median price of $280,000. It was a steady growth in prices during the pre-pandemic, only rising and decreasing 1 to 2%. But during 2021, prices suddenly reached $364,000 and a staggering $413,000 in 2022, a 47% increase from 2020 to 2022. But what could be the main reason for this astounding growth? A lot of factors play with this rise, but one reason is the lack of housing supply. In an economy, there will always be demand and supply. The lack of supply may increase the need for demand. And this is what is currently happening with the US housing market. There is a huge demand for housing, but there are just not a lot of houses to sell. How does this connect with the rising prices? Due to low supply, sellers are raising prices due to the huge demand for housing. But even if we drop the housing prices to 20%, the supply will still not reach demand. Jack McDowell, Chief Investment Officer and co-founder of Palisades Group, stated that inventory is approximately 46% below the historical average dating back to 1999. So why not just build more houses? It has always been a challenge since the 2008 housing crash when the construction of new homes plummeted due to the housing bubble. Even though we can see a 2.7% increase in single-family construction and a 4.1% application for building permits, builder confidence is still low. The National Association of Home Builders, or NAHB, stated that builder sentiment reached 44 to 45. 50 and above means more builders see good conditions. But let's take a look back at the 2008 housing bubble. A housing bubble happens when prices rise up at a rapid pace, driven by increased demand, limited supply, and emotional buying. This creates a scenario where home buyers feel that they need to pay more to get into the housing market, and sellers ask more to get out of the market. However, bubbles do eventually burst, and when the housing bubble bursts, home values burst down too. This is oddly similar to the Dutch tulip mania or the Dutch tulip bubble. During the 1600s, tulips are considered to be the next big thing. Considered to be a luxury item, prices soared as the demand for tulips increased. This led people to invest more because of a more positive outcome and a bigger profit in the future. However, the tulips did eventually crash, and people started to become bankrupt overnight due to their tulip asset prices dipping sharply. This is also what happened with Black Tuesday, or mainly one of the reasons and causes of the Great Depression. Stock markets are rising to unsustainable levels, and then the market crashed when it peaked. This leads to asset prices decreasing and people to be bankrupt too. The big banks also tried to stimulate the market, but it was a short-term solution. The Great Depression was considered to be one of the lowest points in American economic history. Do you think there will be a housing bubble again? I want to know your thoughts in the comments down below. Don't forget to subscribe for more videos about finance, technology, and business. Now the main question is, what will happen in the future? Existing home sales prices are to decline 0.9% to $375,000 according to the National Association of Realtors or NAR. This would also be the second consecutive month of year-over-year declines after a 131 months of record increases. The NAR also stated that home prices dipped from 2.4% from February to March and are currently down 22% from a year ago. Lawrence Yun, chief economist at the NAR, quoted that home sales are trying to recover and are highly sensitive to changes in mortgage rates. Yet, at the same time, multiple offers on starter homes are quite common, implying more supply is needed to fully satisfy demand. It's a unique housing market. Furthermore, mortgage rates peaked higher this past few weeks, reaching 6.43%. According to Freddie Mac, a U.S. housing finance company, mortgage rates remained steady throughout May, recently finishing at 6.39% during the third week. Daniel Hale, chief economist at Realtor.com, stated in an article in Forbes Advisor that if current economic conditions persist with elevated mortgage rates and home prices amid scarce inventory, the market is likely in for a long, slow climb and a few bumps along the way. Housing economists also point out that a market crash would likely not happen. They point to 5 main reasons why. The first one is that the supply is still very low. Secondly, builders are not meeting up with the demand. Next, demographic trends are creating new buyers such as the millennials in their prime buying years. Lending standards remain strict too. And lastly, foreclosure activity is muted. Should we expect lower housing prices? Only time will tell. But as builders and realtors are slowly catching up to the demand and housing prices are decreasing slowly, we should expect a cool down to the heated market. But we should also not expect a sharp drop. Greg McBride, the chief financial analyst of Bankrate, stated that a plateauing of prices is more likely than a steep fall. The housing market is one big chunk of the US economy, at around 16% of it. But if you want to find out more about the possible US economy crash or about the hyped Tesla Cybertruck, don't forget to subscribe and click that bell button for more videos about finance, technology, and business. This is Finance Spur. Have a great day.